Very good morning, my dear soldiers. We are in the new chapter, Accounting for Reconstruction of Companies. In last couple of lectures, we completed the chapter Amalgamation. This is the time to start with a new chapter. So apart from this internal reconstruction, we have one more chapter in my schedule, which is liquidation of companies. We will see at the end. Sir, actually, by taking the introduction, at the time of taking the introduction, I'm not differentiating the chapters Amalgamation and internal reconstruction. We completely seen as a package. So I started my sessions with itself the concept of reconstruction, not internal reconstruction, with the concept of reconstruction. If you observe, the title name is also here, Accounting for Reconstruction of Companies. But even though it is reconstruction of companies, he is only dealing with internal reconstruction in the chapter. So we already seen the meaning of external reconstruction, and one of the classic example for such external reconstruction is amalgamation in the nature of merger also we've seen, right? Okay. So let me give a layman introduction first. As already I given, I know, but still exclusively for this chapter, I want to give introduction. Then we will move on with other issues, guys. Concentrate. When a company is in generally go for internal reconstruction or external reconstruction, a company who suffers continuous losses, then their existing financial statements are not showing true and fair view because of the overvaluation of assets or unrepresented assets like intangible assets anywhere exist. So overall, the existing net worth of the company is overvalued. Am I right? So then what we should need to do? We should go for either internal reconstruction or external reconstruction. Then in the process of internal reconstruction, what we are doing in generally, the first and foremost thing is there is no liquidation of existing company. As like in case of amalgamation, here we are not liquidating. We are not liquidating any company. That point first you should bear in your mind. There is no liquidation of existing company. So then in case of internal reconstruction, what is going on? Here, revaluation of assets, and reassessment of liabilities is going to occur. Reassessment of liabilities. You know why? So we already discussed previously the existing assets and liabilities are not depicting their true value picture, means you should need to go for revaluation. Okay. So maybe due to such revaluation of assets and reassessment of liabilities, you may derive certain profits. Our ultimate objective is huge profit and loss account debit balance is there under asset side of the balance sheet. If I generally speak in other than Schedule 3 format, the profit and loss account debit balance is there under asset side of the balance sheet. If I'm talking with respect to the Schedule 3, there is a huge negative balance under the reserves and surplus with respect to profit and loss account. Such profit and loss account I need to nullify with profits derived from the process of internal reconstruction. So not only revaluation of assets and liabilities, here also occur variation in shareholders' right. Variation in shareholders' rights. Do you know what is the meaning of variation in shareholders' right? So the right is right relating to either voting power or right relating to either receipt of dividend. Maybe there is a variation. There are change in rights with respect to receipt of dividend or with respect to participation in the meetings. If there is variation in such right, which is also happen in the form part of internal reconstruction. Okay. Apart from this, maybe related to shareholders, it also occurs. There is a reduction of share capital. Reduction of capital. What is the meaning of reduction? Sir, I will explain all these things once again through diagrammatic representation, just as a process of definition of internal reconstruction. Just I am adding one by one. No worries. So reduction of capital means there is a decrease. There is a decrease. In which capital, guys? Decrease in paid up capital. Decrease in paid up capital. Maybe decrease in paid up capital will occur in so many ways. I mean to say, if out of the existing capital, if something is sacrificed by the shareholder, then decrease in paid up capital is going to occur. Out of the existing paid up capital, if certain portion is paid back by the company to the shareholders, again there is a scope of decrease in the paid up capital. So that's why a decrease or the reduction of capital is going to occur in so many ways. Okay, just leave it. Next, compounding activities. Compounding or negotiations with various liability holders, with various creditors. I can put it simply, with various creditors is also going to occur in case of internal reconstruction. So that means, what is the primary objective of internal reconstruction? As like external reconstruction, the primary objective of internal reconstruction is also showing the existing financial statements at true and fair view. Now I'm giving a basic idea. Sir, due to all these procedural activities, what the company wants to do, sir. Now, after completion of all these internal reconstruction process, the company will achieve certain profits, right? The company will achieve certain profits. With such profit, or that such profit are ultimately useful to nullify, such profits are ultimately used to nullify debit balance of profit and loss account. Debit balance of profit and loss account. Not only the debit balance of P&L, which are also used to nullify unrepresented assets. Unrepresented assets also we can nullify. So then the existing financial statements depicting the true and fair picture. That is the objective actually. So just a layman outline just I given. In case of internal reconstruction, what happened? Now due to various activities, we are getting profits. Such profits are ultimately useful to set off the existing debit balance of profit and loss account and unrepresented assets. Now, sir, in case of internal reconstruction, how in generally it will occur? Now I'm going to explain, concentrate. For example, if a company who wants to conduct internal reconstruction process, who wants to decide to adopt internal reconstruction process, first it should frame scheme. It should frame scheme. What is the meaning of scheme, sir? Scheme means the board of directors will conduct a board meeting. They will discuss about the existing financial structure. Then, sir, if our company is going to continue in the same way, then there may be a chance of liquidation in the near future. It is better to reorganize the existing financial statements, and the financial statements are also not showing true and fair view. Then according to the decisions and the opinions of the board of directors, they will first frame a scheme. In such scheme, various issues are involved. Maybe issues related to revaluation of assets and reassessment of liabilities. Maybe disposal of certain assets is also possible. Maybe repayment to the certain liability holders is also possible. Okay, so things related to shareholders also they are going to discuss. Next, the compounding or negotiation activities with various creditors, each and every party, how we are going to deal. All such issues, they simply discuss, they make it finalize in such scheme. Next, after putting such things under the scheme, they will discuss each and every issue with that party, because so simply board of directors took a decision, there is no guarantee to accept such terms and conditions by the other parties as well. For example, if an issue is with respect to the shareholder, then board of directors will conduct a shareholders meeting. Then they will discuss what are the matters they actually decided in the board of directors meeting with the shareholders. So our company situation is very bad. Financially, the company is a sick company. So we are unable to continue the company in the future if the same thing is going to occur. So that's why you need to forego something. You need to change your shareholders' right. You need to lose your dividend. So something like that, we will start the negotiation. Then a final thing will be decided in between the final scheme will be decided in between the shareholders and the company. As like in the same process, we are arranging the meeting with debenture holders. We are arranging the meeting with the bankers. We may arranging the meeting with trade payables. So like that, various liability holders who are all present in the balance sheet, we will make it negotiation. We will finalize it. Then such a scheme is ultimately submitted to whom? Such a scheme is ultimately submitted to regulator of the Companies Act 2013. One of the regulator is NCLT, National Company Law Tribunal. So these all things actually not there in our accounting books. So such all things actually occurred as per the Companies Act 2013. For better understanding, just I am telling you guys. But if you have this overview, then you can understand in better manner. Okay, so such a scheme is ultimately sent to the NCLT. So NCLT, we can call it as court. In general, we are call it as court, which is nothing but National Company Law Tribunal, one of the regulator as per the Companies Act 2013. Then NCLT will take up the case. NCLT will check each and every provision of the scheme, if it is at the best interest to all the parties. So due to such scheme, nobody is losing, or due to such scheme, nobody is getting benefit, which is an equitable basis to all the parties, and which is at the best interest to the society, then NCLT will approve. They will make a application. So first, then NCLT may approve such scheme ultimately. They will approve. So once NCLT approves such scheme, then company will start conducting the internal reconstruction procedure. Company will start conducting internal reconstruction process. Without having the court approval, we can't start the internal reconstruction process. We can't initiate the internal reconstruction process. That is very, very important. Next, sir, now during the internal reconstruction process, what is going on, sir? Such things, what happened internally, Am I right? Sir, after completion of the internal reconstruction process, now at the time of preparation of financials, after this, at the time of preparation of financials, especially related to balance sheet, the court may order to add the word and reduced, because Every stakeholder should know such facts. By seeing the words unreduced itself, any person who is the user of such financial statements can easily understand that. So the company already conducted the internal reconstruction process. After completion of internal reconstruction, this is the status of the existing financials. So to understand such facts, the court may order by using the words and reduced at the time of presentation. Now concentrate here. Sir, internal reconstruction process. Internal reconstruction process involves all these activities, guys. What are such activities, sir? Concentrate here. It may involve just a second. Yeah. So we can call it as methods of internal reconstruction as well. The internal reconstruction procedure or the methods of internal reconstruction as well. You can call it as methods also, not an issue. Sir, what are going to occur under that? Alteration of share capital, alteration of share capital, variation in shareholders' rights, variation in shareholders' rights. Then coming here, reduction of share capital, compromise or arrangement, compromise or arrangement, and the last one is surrender of shares. Surrender of shares. Now concentrate, guys. Sir, all these are actually form part of Companies Act 2013 except surrender of shares. I mean to say, alteration of share capital is going to happen as per section 61 of the Companies Act 2013. Variation in shareholders' right is going to occur as per section 48 of the Companies Act 2013. Reduction of share capital provisions is related to section 66 of the Companies Act 2013. Compromise or arrangement is based on section 232 of Companies Act 2013. Surrender of shares, nowhere discussed the concept of surrender of shares in Companies Act 2013, which in generally against the provisions of Companies Act 2013. We should not conduct surrender of shares in generally in case of companies. But if court rules applicable, I mean, we already applied to NCLT. If court give permission, then we can go for surrender of shares. We are dealing the surrender of shares at the end. No worries. We are going to discuss one by one, first of all. So in case of internal reconstruction, this entire process may be more than one process or maybe multiple methods may be involved at a single scheme. This scheme comprises more than one method is also possible. We will discuss about one by one method. Now, all of you, can you please come to alteration of share capital here? Sir, in case of alteration of share capital, what will happen, sir? Alteration of share capital involves subdivision of shares, which involves subdivision, or maybe which involves consolidation of the shares. Consolidation. Or maybe this involves conversion into, conversion of shares into stock and vice versa. Now coming here, sir, what is the meaning of subdivision, sir? Can you please explain the meaning of subdivision of shares? Sir, for first 30 minutes, it's look like a theory class. Please, all of you, bear with me. Once, if you understand the crux of the provisions, I mean, the crux of the Companies Act 2013, then it is very easy to understand the things, guys. So please, all of you, bear with me for some time, guys. All of you. Okay, are you with me, all of you, right? Please, sir. Good morning, sir. Video is buffering. Amma, I think so. The fault is not from my end. So my internet connectivity is good. Please, all of you can check from your end. Right now, it is clear, right? Any one person, can you please confirm? Right now, it is clear? Yes, fine. Thank you. Thank you so much. Okay, come back. Now, in case of subdivision of shares, the existing face value of equity share is going to divide. I mean, the existing number of equity shares is going to divide into multiple number of shares. Sir, why? What is the reason why you are going for subdivide the existing number of shares into multiple number of shares? Maybe we are in the process of internal reconstruction. There is a possibility of making payment to the various parties. That's why just we are converting, or we are subdividing the existing face value into multiple number of shares. I'll give an example for better understanding. Concentrate. Let me take the company Rani Limited. In Rani Limited, right now number of shares are 10,000. 10,000 shares are there. At the rate of face value, 100 rupees. Sir, 10,000 into 100 rupees means, which is equal to 10 lakhs, right? The total face value is 10 lakhs. Now, they want to subdivide each share into 10 share. One share into 10 shares. Now, after subdivision, in Rani Limited books, how many number of equity shares exist? 10,000 into 10 shares, which is equal to 1 lakh shares. At the rate of, right now, 10 rupees each. If you observe, earlier 10,000 into 100 rupees, so the total amount of the paid up capital is 10 lakhs. Now, right now also 1 lakh into 10 rupees, the total amount of the paid up capital is 10 lakhs. That means due to subdivision of shares, there is no change in the total capital with respect to shareholders. The total capital is same, but there is a change in face value per share, as well as there is change in number of equity shares as well. Sir, but due to this subdivision, maybe company will not get any profit, company will not lose any profit as well. So why we are doing as a process of internal reconstruction for the purpose of smooth conducting the activities of internal reconstruction, just we go for subdivision. Next, one more that I have. Sir, is it any company simply can do the alteration of share capital? Alteration of share capital is nothing but you are amending your capital clause. You know the Memorandum of Association in Companies Act 2013. In Memorandum of Association, we are having so many clauses like registered office clause, share capital clause. Am I right, guys? So at the time of making alteration of Memorandum of Association, lot of compliance procedure you need to adopt as per the Companies Act 2013. You would learn such things under the paper law in paper law in group number 1. Am I right? So such an entire alteration of Memorandum of Association provisions you need to apply to alter the existing share capital legally. But for accounting perspective, we are only doing very small entry. Just we can do with a small entry, we can complete the alteration of share capital. But coming to the procedural aspect, we need to involve so much. We need to do so much. I can give certain examples here. Sir, before going for alteration of share capital, such a provision should exist in the Articles of Association. For example, if such provision is not exist in the Articles of Association, first you should amend the Articles of Association. Then you can insert one provision. Our company can have a right to alter the existing equity shares. That is, we can go for subdivision, or we can go for consolidation, or conversion of shares into stock in trade. I mean, conversion of shares into stock and vice versa is possible. You can insert. So after that, company, they need to conduct a general meeting. They need to conduct a shareholders meeting, because alteration of share capital is related to the existing shareholders issue. So that's why the shareholders should accept for that. Then a normal resolution or a general resolution should be passed in such general meeting. More than 50% of such meeting should be accepted for such alteration. Then only company can have a right to alter the share capital. So without completion of all these procedural issues, company cannot conduct the alteration of share capital. So then, coming to the accounting perspective, what is the journal entry, sir? It's very easy. The old face value you need to cancel. I mean, equity share capital account data. So the old face value is 100, right? You can make it debit the old face value, which is 100. The total capital is 10 lakhs only. There is no change to equity share capital. Now face value is 10 rupees. You can mention it under bracket. The total amount is 10 lakhs. Being 10,000 equity shares are subdivided into 1 lakh equity share at the rate of 10 rupees each. That is the narration you can pass. That's why accounting wise, which is very easy, but to put such entry, lot of effort I need to take by adopting the so many legal procedure activities. Okay. Next, come to the consolidation, guys. Sir, in the same way, in case of consolidation also, in the same way it is going to occur. Now, the same company want to consolidate 10 shares into 1 share. Now, if you check, existing shares are 1 lakh after subdivision, right? Now, it want to consolidate such shares. Each share, each 10 shares consolidate into 1 share. Now, what is the journal entry you should need to pass here? Now, equity share capital, 100 rupees face value, you should need to cancel. There is no change in the total paid up capital. 2 equity share capital. So the new face value is 10 rupees. Here you should represent the face value absolutely, guys, because the entry representation is occurred only through such face value. So now, in case of consolidation, again, the 1 lakh shares are converted into 10,000 shares. Okay. Next, come to conversion of shares into stock and vice versa. So before explaining conversion of shares into stock, first let me differentiate share and stock, guys. You know, in generally, you might listen the word the stock in companies at 2013. The difference between share and stock is a company, if it comes for the public issue or under the primary market at the time of issue of shares to the shareholders, it can only directly issue to the share. It can only issue shares. It cannot issue the stock. I mean, issue of stock may not be possible directly by the company to the shareholder. Issue of shares by the company to the shareholders is possible, but issue of stock is not possible directly. But at later point of time, after issue of shares, if you want, you can convert such shares into the stock. Sir, in case of denomination, how it will differs, you know, the shares are having a particular denominations. I mean to say the face value is 10 rupees, face value 100 rupees. Okay, like that particular denomination is possible in case of shares. But stock, there is no denomination. Sir, any worth of the stock is possible. I mean to say, sir, is it possible 1,50,000 stock? Yes, it is possible. Sir, is it possible 15,555 rupees stock? Yes, it is possible. There is no denomination at all. Sir, why during the process of internal reconstruction, company wants to convert the existing shares into stock, you know? Now, in this process, we need to make payment to various parties, right? At that point of time, sometimes there is no possibility of issuing shares because the fractional issues are going to occur. But if you are already converted into the stock doesn't have any denomination, you can issue any much of stock to any party. because it doesn't have any denomination. That is one thing. Sir, is there any difference in voting rights in between shares and stock? Sir, there is no difference with respect to voting rights. How in case of shares, the shareholders are getting voting rights. In the same case, the stock, the persons who holding the stock is also getting the voting rights. There is no difference with respect to the voting rights. Next, concentrate. Sir, a fully paid up equity shares only can be converted into the stock. A partly paid equity shares cannot be converted into the stock. A fully paid equity shares, once after issue of equity shares, we are collecting the total amount from the shareholders, then only you can convert into the stock. So 3 differences almost I told. So one difference, at the first instance, in case of primary market, we cannot directly issue the stock. So after issue of the shares only, we can convert such shares into the stock. There is no particular denomination in case of the stock. And the last issue I told. So to convert the existing shares into the stock, the existing shares should be fully paid up. Okay, let it be. Leave such things. Now, conversion of such shares into stock, what is the impact? What is the impact as per our financial accounting, sir? The impact is very clear. Stock is also form part of shareholders fund. Stock is also form part of shareholders fund. Just you need to debit the old capital. For example, which is conversion of share into stock happen. Now you need to debit the capital, equity share capital account debtor. Let us assume right now 10 lakhs worth of equity shares are there, face value at the rate of 10 rupees. Let us assume right now we are converting into the stock. Now equity share capital, 10 rupees face value amount 10 lakh gone to equity stock account, which is 10 lakh. Such a simple journal entry you need to pass as per accounting perspective. But I told you a lot of internal compliance you need to follow to do such activity. Again, for example, there is a conversion of stock into the shares. Then the entry need to be reversed. Vice versa means just in the other way, if a conversion of stock into shares happen, the entry need to be reversed. So that's why in case of alteration of share capital, there is no profit, there is no loss to the company as well as shareholder. So just the existing capital is simply altered. One more thing you need to remember here, in case of alteration of share capital, there is no reduction of capital is also occurred. Sir, in any way, is there any change in the share capital? If you observe, before and after same. In case of conversion of shares into stock also before and after same. That's why there is no reduction of capital in case of alteration. Okay, guys. Next, coming to variation in shareholders' rights. All of you, please come to variation in shareholders' rights. Sir, in case of variation in shareholders' rights, what will happen? I'm going to explain here. Concentrate. Which is variation in shareholders' rights. You know one thing, guys, the variation in shareholders' right is with respect to voting right. Or maybe the variation in the shareholders' right is with respect to dividend right. Sir, how it occurs, sir, in generally? Maybe the existing cumulative preference shares you are going to convert into non-cumulative preference shares. In case of cumulative preference shares, if at any point of time company is not having the sufficient profits, then in the next forthcoming years, it is the obligation of the company to make repayment to the cumulative preference shareholders in the years in which company attained the sufficient profits. That is nothing but cumulative preference shares, right? But right now, during the process of internal reconstruction, the company wants to convert the cumulative preference shares to non-cumulative preference shares. Yes, there is a change in dividend right. Maybe your company is having 10% preference shareholders. Right now, they want to convert to 6%, declaring dividend to the equity shareholders. Still, preference shareholders can enjoy some more dividends in case of participated preference shares. So, conversion of participated preference share to the non-participated preference shares is also related to the change in right. Sir, you are almost telling all examples with respect to preference shareholders. Is it variation in shareholders' right? Is it possible in case of equity shareholders? Yes, it is possible variation in shareholders' right, both in case of equity shareholders and preference shareholders as well. Maybe you've seen one chapter, variation in rights of the equity shareholders. I mean, differential rights of equity shareholders. You are having one chapter. Do you agree, guys? Where it is there in buyback of equity shares. Actually, after buyback of equity shares, differential equity shares, maybe one of the chapter they introduced in our ICA material itself. So that in generally, we are clubbing both buyback of equity shares and differential equity shares. We will do it simultaneously. Difference in rights of the equity shareholders. Differential equity shareholders means, please all of you concentrate. Maybe in my company, there is a possibility of having more than one class of equity shareholders. More than one class of equity shareholders means maybe class A equity shareholders will exist and a class B equity shareholders will also exist. Sir, what is the difference, sir? What is the difference in between class A equity shareholders and class B equity shareholders? The difference may be with respect to voting right. With respect to voting right means, for example, class A shareholders are getting full voting rights. One share, one vote. Maybe class B shareholders, while compared with class A shareholders, their voting right is only restricted to 50%. While compared with class A shareholders, class B shareholders are getting less than 50% voting. I mean to say, for each and every one share, they will get only 0.550 vote only. That means if I hold, let us assume 10,000 shares, then I will get only vote for 5,000. Yes, it is possible. Sir, is it eligible? Is it eligible to company issue such different class of equity shares? Yes, but provided you need to comply the certain provisions of Companies Act 2013, then different class of equity shares is also possible. Right now, if the company is going to convert the class A equity shareholders into class B shareholders, then which is technically known as variation in shareholders' rights. Or maybe if the company going to convert class B shareholders to class A shareholders, then we can call it as variation in shareholders' rights. Not only the voting right, with respect to the dividend right. With respect to the dividend right also, the company can have more than one class. For example, if the dividend is going to issue to the class A shareholders, let us assume 10% of the dividend per share. 10% of the dividend per share. Just let us assume. Then out of the class A shareholders, we are going to issue 60% out of class A shareholders. Maybe like that, just we can design. For example, here face value is 100 rupees. If it is 10% means how much amount of the dividend they will get here? 10 rupees. Here 10 rupees means out of 10 rupees, here they are getting 60% means here maybe they are getting 6 rupees per share. So like this, variation in dividends rights with respect to different class of equity shareholders is also possible. Now conversion of one class to another class, we can also make it term it as variation in shareholders rights. Sir, in case of variation in shareholders rights, what are the accounting entries we need to adopt in our books? That's very simple. The old right should be vanished and a new right came to the picture. That is, for example, cumulative to non-cumulative. Then the entry is cumulative preference share capital account data. Cumulative preference share capital account data to non-cumulative preference share capital. Am I right, friends? But there is no change in the total capital. Let us assume the total capital is 10 lakhs. There is no change in the face value as well. The only difference is earlier the preference shares are cumulative preference shares, but right now the preference shares are non-cumulative preference shares. So simply the old right should be debited and the new right should be credited. That's it. That's it, guys. That is related to variation in shareholders' rights. Okay. All of you with me, guys? Do you understand till now what I discussed? Tell me, guys, nobody is giving response. Quickly, can I proceed further? Can I go to reduction of share capital? Okay, fine. Please consider it, guys, all of you. So the next issue is reduction of share capital. The next issue is reduction of share capital. So reduction of share capital may occur in generally in three ways, guys. The reduction of share capital in generally occurred in three ways. In one way, by extinguishing unpaid capital, by extinguishing unpaid capital, or I can put it as conversion of partly paid up shares into fully paid up shares. Fully paid up shares by extinguishing the unpaid capital. By extinguishing the unpaid capital. I will explain what it is. Next, there may be a reduction of share capital is occur by payment of part of the paid up capital. Part of paid up capital. So the reduction of share capital is also going to occur due to sacrifice made by shareholders. Due to sacrifice made by the shareholders, or maybe some of the paid up capital may be compromised by the shareholders. So such sacrifice made by the shareholders is going to occur again in two ways. So the one way is, just a second. So the one way is reduction in paid up value, but not in face value. So another way is reduction in paid up value and face value. This is important, little bit concentrate. So the earlier two things, either alteration of share capital or variation in shareholders' right, most of the things are related to theoretical aspect. But from here, the real internal reconstruction procedure is going to start. Concentrate. So extinguishing unpaid capital or conversion of partly paid up shares into fully paid up shares. So due to which, how the reduction of share capital is going to occur, sir. I'll give an example you can understand very easily. So let us assume, let me continue the same company. The company is Rani Limited. Now in the books of Rani Limited, 1 lakh shares are there. So the face value is 10 rupees. And the paid up value, let us assume 8 rupees per share, which is a partly paid up share. Now, out of this 10 rupees, 2 rupees is still unpaid. Why the shareholder is not paid? Company is not making any call. That's why shareholder not paid. Now, during the process of internal reconstruction, you can adopt the reduction of share capital. Now, how the reduction of share capital is going to occur? Now, the company make it the partly paid up equity shares as fully paid up equity shares. The company assume that you are paying the equity share as fully paid up. You already paid up entire amount, no need to pay any further. That means certain portion of the face value they are going to cancel. Extinguishing of the unpaid capital. Unpaid capital per share is 2 rupees. Right? So the company is simply extinguishing the unpaid capital. Now at that point of time, sir, how there is a reduction of capital is possible, sir? Now the existing paid up capital may be 1 lakh into 8 lakhs. But how the reduction of share capital is possible? In future, company have a right to call if the existing equity share is a partly paid up shares. But if the existing partly paid up shares are converted into fully paid up shares, then company will not have a choice to make for call. So which is nothing but reduction in the call money only. So reduction of capital in the future only. Maybe at present there is no reduction properly. But in future, if the company wants, they can make it call, they can make a call. But such right actually such right actually foregone by the company. So that means there is a decrease in the capital in the future. If I not made this, in future there is a scope of occurring addition of capital. So that's why we can call it as reduction of share capital, not at present. Maybe reduction of share capital is also possible in future. So now what is the journal entry I need to pass at this instance, sir? It's very easy. Equity share capital account data. Earlier face value, how much? 10 rupees. So 1 lakh into 8 rupees, paid up value, earlier 8 lakhs. Only you need to record with paid up value na, to equity share capital account. Now the face value will also 8 rupees, guys. Earlier the face value is 10 rupees. Now the face value will also, sorry, the face value changed. So which was changed to 8 rupees, but the paid up capital is same. There is no change in paid up capital. So the entry is equity share capital account data 10 rupees face value to equity share capital account 8 rupees face value. Now the face value is 8 rupees and the paid up value is also 8 rupees. After this, what happened? The face value is at the rate of 8 rupees and the paid up value is also at the rate of 8 rupees. If you observe, so conversion of partly paid up shares into fully paid up shares happened through extinguishment of unpaid capital. This is nothing but reduction of share capital. Next, coming here, guys, by payment of part of the paid up capital, by payment of part of the paid up capital. So let me continue the same example. Number of equity shares held 1 lakh shares. Let us assume face value is at the rate of 10 and paid up value is also at the rate of 10. So let me take the paid up value and face value, both are same. Now, by payment of part of paid up capital means, sir, we have excess idle funds. Our company is not able to generate the sufficient profits. Then at that point of time, it is better to repay certain portion to the equity shareholders. But in general, in case of internal reconstruction is not occurred, because the company is already suffering losses means no company is want to make repayment to the paid up capital. But if it all occurred, what are the general entries need to pass, sir? For example, out of the 10 rupees paid up value, company is going to pay 2 rupees per share. Company is going to pay 2 rupees per share. Then what is the general entry, sir? Equity share capital account data to equity shareholders account. Equity share capital account data to equity shareholders account. At the rate of 2 rupees, you need to pay 1 lakh into 2 lakhs you need to pay. Sir, you already decreased the equity share capital paid up value here. No need to decrease the face value. Face value is same. Earlier 10 rupees, after making payment also 10 rupees. But they are paying 2 rupees per share now. At later point of time, if they required in the future, again, then they can make it call. That's it. So just at the time of making payment, equity share capital account data to equity shareholders account. Now, you can make payment to shareholders, that is equity shareholders account data to bank account or to cash account. How much amount which is? 2 lakhs. Like this, you need to pass journal entries at the time of making payment to the part of the paid up capital. Next, coming to the last issue, guys. Sacrifice made by the shareholders. Sacrifice made by the shareholders. Reduction in paid up value, but not in face value. I'll take an example. So the existing shares are same 1 lakh equity shares, let us assume. And the face value is 10 rupees. Paid up value is also 10 rupees. Now, shareholders is ready to foregone to that extent of 4 rupees per share. For each and every share, out of which the paid up value 10 rupees, shareholder is ready to foregone. To the extent of 4 rupees per share. Now, what is the accounting treatment I need to adopt in my books of accounts? First, one thing is sure, there is a reduction in paid up value only, but there is no reduction in face value. Am I right? That means no need to disturb the face value. You can only change the paid up share capital, that is equity shareholders account data. Equity share capital. Equity share capital account data. Sir, each share is foregone at the rate of 4 rupees means 1 lakh into 4 rupees. How much it is? 1 lakh into 4 rupees, which is nothing but 4 lakhs. Now consider, guys, all of you. If the shareholders is ready to foregone certain extent means due to which you are getting profit, right? Your company is getting profit. But till now, in case of conversion of partly paid up shares into fully paid up shares, or by payment of part of the paid up capital to the equity shareholders, your company is not getting any profits or loss. But at the time of making sacrifice made by the shareholders, your company is getting profit in the process of internal reconstruction. In the process of internal reconstruction, whatever the profit or the loss you derived, such a profit or loss, you can make it transfer to a reconstruction account. The account we are using is reconstruction account. Maybe in amalgamation, we are using it as a realization account. Right now, we are using it as a reconstruction account. Whatever the name you can call, the concept is same. Here, you are transferring certain profit to the reconstruction account. Why you are transferring that profit to the reconstruction account? You may ultimately use such profit with to nullify huge losses which are presented in your balance sheet. So that's why you are pooling all of the profits which arise during the process of internal reconstruction. Sir, no need to touch the face value here. Just you can only reduce the paid up capital. So now 1 lakh into 4 rupees means automatically the paid up value is reduced to 6 rupees. So that's why no need to disturb the face value, because it is clearly given that there is only reduction in paid up value but no reduction in face value. Sir, if at all there is no reduction in face value means in future if company wants, they can make it call. So that's why they are not disturbing the face value. Now the same scenario, if I go to the next one, that is reduction in paid up value as well as face value. Now concentrate the same scenario. There is a reduction in paid up value and face value. Now what will be the journal entry, guys? Scenario is same, but there is a reduction in face value as well as paid up value. Amount foregone by each and every equity shareholder is 4 rupees. Now what is the journal entry, sir? Equity share capital account data. Now entire 10 rupees face value, you need to make it debit. So entire 10 rupees face value means 1 lakh into 10 rupees, which is 10 lakh. To equity share capital account. New face value, how much? Once the 4 rupees is foregone, the new equity share capital is 6 rupees. 1 lakh into 6, which is 6 lakhs. Now the difference you can make it transfer to reconstruction, which is profit. To reconstruction account, which is profit. Now if you check, both the impact is same. Now the impact under the reconstruction account earlier is also 4 lakh. Now the impact under the reconstruction account is also 4 lakh. Then what is the difference? Sir, in case of earlier case, there is no change in the face value. But in case of reduction in paid up value and face value, if you observe, there is a reduction in face value from 10 rupees to 6 rupees. As well as you are getting certain profit. Do you understand what I am telling? So then in problems, if you simply telling that shareholders is sacrificed something, unless otherwise specifically mentioned, we should always think that there is a reduction in paid up value as well as face value. But if it is clearly given that, sir, there is only reduction in paid up value, there is no reduction in face value, then only you can apply this journal entry. But if nothing is mentioned, so if nothing is mentioned by default, we can thought that there is a reduction both in case of paid up value as well as face value. So you need to reduce the face value as well along with the paid up value. Do you understand, guys? So this is the thing actually happened in case of reduction of share capital as per section 66 of the Companies Act 2013. We will see one more time all through my text as a confirmation. No worries. Sir, still two more concepts are there, which is compromise or arrangement and a surrender of shares. Okay. So almost the theory aspects we discussed. So next, from compromise or arrangement, the real internal reconstruction procedures we are going to discuss. So that's why I don't want to disturb in the middle. You can take the break, all of you, at this stage, guys. Not an issue. So time is nearby 7:55. You can take all of you break up to 8:10. Please, all of you assemble exactly by 8:10. Lot of theory we discussed. That's why I want to put a small break. Okay. Right, guys, welcome back. We completed up to reduction of share capital, right? So the next concept is compromise or arrangement. So please all of you concentrate. This concept is very much important. If you can understand the concept of compromise or arrangement, nothing is there in this chapter. Compromise or arrangement. Sir, what is the meaning of compromise or arrangement, sir? Sir, compromise or arrangement is an agreement. It is an agreement entered between two parties. It is an agreement entered between two parties, out of which one party is company, and other party may be shareholder or maybe debenture holder or maybe any of the creditor or other party, whatever the case may be. So one party is company and the other party is either shareholder or debenture holder or the creditor. Now such agreement is technically known as compromise or arrangement. Sir, that agreement is for which purpose, sir? Okay, we understood company and the shareholder agreed an agreement. For which purpose they agreed such agreement, sir? The agreement is for the purpose of sacrifice or maybe foregonement. So the company entered into an agreement with the shareholder or the debenture holder or the creditor for the purpose of making sacrifice. For example, they are sacrificing the paid up capital. We already seen through a reduction of capital, that issue. Maybe the debenture holders or creditors, they are sacrificed something. For example, debenture holders liability is 10 lakhs, but out of such 10 lakhs, they are ready to forego to the extent of 2 lakhs. Maybe the creditors, we need to make payment of 5 lakhs, but out of such 5 lakhs, entire 5 lakhs, let us assume, sacrificed. So then such agreement is technically known as the sacrifice or foregone agreement in between the company and the shareholder is technically known as compromise or arrangement. So then what is the difference between compromise and arrangement? In case of compromise, what will happen, the parties may not agree directly. Conflict of interest is there. Conflict of interest means company is asking to sacrifice 50% of their balance, but shareholders are not willing to sacrifice for such 50%. Shareholders are only ready to sacrifice 30% of their balance. Then there is conflict of interest in between company and the shareholders. At that point of time, after completion of the final negotiations, they will conduct multiple general meetings. They will talk with the various shareholders. They will explain the situation of the existing company. Maybe we will offer certain benefits to the shareholders. So by telling such things, we can ultimately have a identity of minds in between the company and the shareholders. Then such things are known as compromise. That means in case of compromise, directly both the parties are not agreed for such terms. But in case of arrangements, there are no conflicts. Whenever the company told, the other party is also directly agreed. He is also ready to honor. So that is the difference between compromise and arrangement. But the ultimate theme is same, very simple, which is an agreement in between the company and the other party for the purpose of sacrifice made or the foregone occurred. Now, at the point of time of compromise or arrangement, what is the accounting treatment we need to provide, sir? Sir, various compromise or arrangement transactions are going to occur during the process of internal reconstruction. We can't tell it as a thumb rule. There is no specific principle as well. But how we should provide the accounting treatment, The universal principle is only one thing. Whenever the company is getting profit due to such compromise or arrangement agreement, we should need to transfer such profit to reconstruction account. That's it. I'll give some scenarios for better understanding. Please concentrate, all of you. Let us assume the creditors balance is balance of the creditors is 5 lakhs. Now the balance of the creditors is 5 lakhs. How the compromise or arrangement agreement is? The compromise or arrangement agreement is, out of such 5 lakhs, to that extent of the 40%, creditors ready to foregone. To that extent of 40% of the amount, creditors ready to foregone. But for the 60%, but for the remaining 60%, for the remaining 60%, they are expecting equity shares. They're expecting equity shares. Still, they don't want to continue as a creditor in your company. After losing 40% of their interest, just they want to continue as equity shareholders. For the remaining 60%, they're expecting equity shares. Sir, now what is the journal entry I need to pass it here, sir? No doubt about it, entire creditors gone, right? So creditors account debtor. All of you please participate. Entire creditors you need to knock off to, out of which 40% is the foregone, means 5 lakhs into 40%, which is nothing but 2 lakhs should need to transfer to a reconstruction account. To reconstruction account, which is 5 lakhs into 40%, 2 lakhs. For the remaining 60%, they are expecting the equity shares to equity share capital account. So depending upon their face value, if you assume face value is 10 rupees, you can put it in the bracket, that is 3 lakhs. So that means amount foregone, you should need to make it transfer to reconstruction account. Sir, one more thing, guys. The another name for the reconstruction is, another name for reconstruction account is capital reduction account as well. Capital reduction account as well. We can use any name synonymously, but if you want to use the capital reduction account, you can use in all the journal entries the same word. But if you want to use reconstruction account for all the journal entries, you can use the same word for the entire internal reconstruction process. Otherwise, you might confuse how much balance is there. To find out the balance in reconstruction account, you would ignore the balance in capital reduction. So that's why you can follow uniformly throughout the problem, either reconstruction account or capital reduction account. Both are same. There is no difference. Okay. Next, I'll give another scenario. The scenarios, the concept is not at our compromise or arrangement. So throughout this chapter, actually, we are dealing mainly based on compromise or arrangement agreements only. Second scenario, concentrate, guys. The same creditors balance exists, which is creditors is 5 lakhs. Now, what is the situation? The situation is creditors ready to foregone. Creditors ready to foregone 40%. Yes. But when they will ready to foregone such 40%, when they are ready to sacrifice 40%, as a result of such foregonement, they are expecting 1 lakh worth of equity shares. As a result of foregonement, they are expecting 1 lakh worth of equity shares. Now all of you concentrate. How much actually they foregone? 5 lakhs into 40% means they foregone. 5 lakhs into 40% means they foregone 2 lakhs. But when they're ready to lose 2 lakhs, if company issued 1 lakh worth of equity shares, this is not for the remaining 60%. Here company is not issuing this worth of equity shares, not for the remaining 60%. So remaining 60% is still continue as a creditors. He is not at all talking anything related to the remaining 60% of the creditors. That means 3 lakhs creditors just continue as a creditor. but they're ready to sacrifice to the extent of 2 lakh, provided they're expecting 1 lakh worth of equity shares. That means, do you know the real sacrifice here? Therefore, real sacrifice is equal to gross sacrifice 2 lakhs, gross sacrifice 2 lakhs. They are expecting 1 lakh. We are paying in the form of 1 lakh equity shares. Therefore, real sacrifice is equal to only 1 lakh. Now, at that point of time, what is the journal entry, sir? Please concentrate. Creditors account debtor. Now you should need to nullify the creditors only to the extent of 2 lakhs. Out of that, real sacrifice how much? Real sacrifice is 1 lakh. You can transfer such real sacrifice to reconstruction account. To reconstruction account, which is 1 lakh. Remaining 1 lakh, you are issuing the equity shares to equity share capital account. To equity share capital account, which is 1 lakh. That is the entry, guys. Creditors account data to reconstruction account to equity share capital account. So that means you need to check at the time of issue of equity shares or preference shares to the liability holder, as a result of sacrifice made by them we are issuing, or for the remaining portion we are issuing. If it is for the remaining portion you are issuing, then the sacrifice is a full sacrifice. Sir, if they are issuing as a result of making foregone, then the sacrifice is a gross sacrifice, not a real sacrifice. At that point of time, you need to calculate the real sacrifice after deducting the amount you are paying, either in the form of equity shares, either in the form of cash, or either in the form of preference shares, from the gross sacrifice. Then you are getting the net sacrifice or the real sacrifice. Such real sacrifice amount only you can make it transfer to reconstruction account. Is it clear to all of you this issue? May I know, guys? In query box, may I know? Nobody is responding. Can you please tell me? Can I go further? So whenever I started internal reconstruction, very few members are participating. Yeah, please let me know. So once the problem started, then this chapter is also very much familiar, and this chapter is also very much interesting. Don't bother about that. Okay. Right. Clear, sir. Next, let me go to the next issue. Still not at over. Let me go to the next issue, guys. Sir, in case of unrecorded assets or liabilities realized. Before that, first let me explain this. You know this part, right? I mean, just a second. You know, revaluation of assets and liabilities. So in case of revaluation of assets and liabilities, revaluation of assets and liabilities, how you should going to deal, guys? So if such revaluation is related to asset, or if the revaluation is related to liability, which is nothing but reassessment of liability. Sir, due to revaluation of asset, which is upward revaluation, I mean to say, if you are getting profit, upward revaluation, if you are getting profit, then the entry is asset account data to reconstruction account. Asset account data to reconstruction account is the journal entry. Sir, if the same asset is going for downward revaluation, then what is the journal entry, guys? Reconstruction account data to asset account. Sir, if it is in case of liability, let us come across the liability situation. If the liability is downward, first let me explain the downward thing. Then the entry is, sir, liability decreased means which is a profit situation. So the liability should be debited. Liability account debtor. The liability account debtor to reconstruction account. Sir, if such liability is upward revalued, if such liability is going for upward revaluation, then what is the journal entry, sir? If it is upward revaluation, the entry is reconstruction account debtor to liability account. So these are already known. Maybe in the revaluation, how we are passing the journal entries. In the same case, just on behalf of revaluation, just you are mentioning reconstruction account. Nothing is great here. Am I right? Okay. Next. Now I am talking about unrecorded assets and liabilities. Unrecorded assets and liabilities. Concentrate, guys. Sir, what is the concept of unrecorded assets and liabilities, sir? Sir, in case of unrecorded asset or liability, if you realize it in the outside market, what is the journal entry, sir? Or if such unrecorded asset or liability is sacrificed by the other party, what is the journal entry, sir? So first concentrate, one by one I'm going to explain. First I'm going to explain things related to unrecorded liability. Sir, for such unrecorded liability, if the other party, liability holder, we are paying the amount, we are discharging such unrecorded liability. What is the journal entry, sir? The other liability holder is ready to foregone, is ready to sacrifice. Then what is the journal entry, sir? Consider all of you. Sir, which is unrecorded liability, right? First you need to record in your books of accounts. Sir, why which is unrecorded, sir? Maybe due to error, I don't know. Maybe due to omission, we don't know. So such facts were not considered earlier. Anything happened during the process of internal reconstruction, you all are rectifying such things. Maybe oversight, anything is occur. Now, for such unrecorded liability, first you need to record into the books of accounts. You know, at the time of recording of the liability, not in the process of internal reconstruction, at the process of recording a liability, what is the journal entry? You know, the common journal entry is P&L account debtor to liability account. This is the recording of unrecorded liability actually. If it is an unrecorded asset, what is the journal entry? You know, asset account debtor to profit and loss account. Asset account debtor to profit and loss account in case of unrecorded asset. In case of liability, profit and loss account debtor to liability. But you know, during the process of internal reconstruction, any profit or loss is derived. Such profit or loss, we can make it transfer to reconstruction account only. So first, at the time of recording, the entry is reconstruction account debtor to liability account. This is not a full and final entry, guys. Still entry is there. Just now we are recording. Sir, how much, sir? Let us assume the amount is 10 lakhs. Let us assume the amount is 10 lakhs. Now what you are doing? Discharging. You are discharging, right? Now, for example, you are discharging for the 10 lakhs, entire 10 lakhs. Now what is the journal entry? Liability account debtor to cash or bank account, which is how much? 10 lakhs, 10 lakhs. Now, here liability credit is there, liability debit is there. Both are cancelled to each other. Now, what is the net entry, guys? Reconstruction account debtor. Reconstruction account debtor. All of you, please participate through your chat box. Reconstruction account debtor to bank account is the net entry. Am I right? That means at the time of discharging the unrecorded liability, the entry is reconstruction to bank. Directly you can pass. No need to record. After that, no need to make payment. Directly you can pass the journal entry reconstruction account debtor to bank account. For example, at the time of discharging, making payment to unrecorded liability, if you are issuing equity shares, then what is the journal entry? Reconstruction account debtor to equity share capital account. For example, if you are issuing preferentials, reconstruction account debtor to preference share capital account. For example, if you are issuing debentures, reconstruction account debtor to debentures account. Sir, one more important issue just I want to tell here. Please concentrate. Maybe for such unrecorded liability, 10 lakhs, consider all of you. For such unrecorded liability, 10 lakhs, just you are making payment to the extent of 60%. Let us assume you are only paying out of this 10 lakhs, just now you are paying only 60%. Now, all of you please concentrate. Just I'm adding one more scenario here. What is that scenario? The scenario is just you are paying 60%. I mean, simply 40% sacrificed. Sir, 40% is sacrifice made by the other party, sir. Then what is the impact? So first entry is reconstruction to liability, 10 lakhs. First you recorded. Now at the time of making payment, concentrate. Liability account debtor, entire 10 lakhs. You need to make a debit to. Out of this 60% you paid to bank, 6 lakhs. Remaining you need to transfer to reconstruction account, which is 4 lakhs. Now if you observe all of you, sir, liability 10 lakhs credit, liability 10 lakhs debit, liability 10 lakh credit, liability account gone. One more thing, under reconstruction account debit is 10 lakh exist, under reconstruction account 4 lakh exist. Then to that extent of the amount, one with other will be nullified. Then what is the net journal entry? You know, the net journal entry is reconstruction account debtor. All of you please participate through chat box, guys. Reconstruction account debtor. After nullifying with 4 lakhs, still how much balance is there? 6 lakhs. To bank account, 6 lakhs. Sir, now what is the conclusion you can draw from this, sir? Now, irrespective of the book value of such unrecorded liability, how much amount you are making payment to discharge an unrecorded liability is relevant for the purpose of recording the journal entry. Sir, here you are paying 10 lakhs, right? Then the entry is reconstruction to bank 10 lakhs. Now here you are only paying 6 lakhs, right? Then the entry is reconstruction to bank account 6 lakhs. Without having second thought, simply you can only think about at which value you are making payment. The book value of such unrecorded liability is completely irrelevant. Now coming to this situation, guys. Hope you are following. Slowly we are entering into the things, guys. Next, coming to the foregone. Sir, such unrecorded liability is foregone by the other party. Now, you know, at the time of recording, the entry, you know, which is reconstruction account debtor to liability account, which is same at the time of recording. Let us assume 10 lakh, 10 lakh. Am I right? Now, the entire amount is foregone by the other party means if the entire amount is foregone, the entry is liability account debtor to reconstruction. You know, right? Profit should be transferred to reconstruction account. Now, what is the impact here? If you observe, this entry is going to nullify with this entry. Now, the impact is nil. That means if an unrecorded liability is foregone by the other party, then no entry. So to tell this, just I passed 2 journal entries. If such unrecorded liability is foregone by the other party, no entry. Sir, in which case actually this unrecorded liability concept is highly useful under the internal reconstruction. Most of the times he is talking about arrears of cumulative preference dividend. Arrears of cumulative preference dividend. You know, guys, in case of cumulative preference shares, if the company is not having sufficient profits, no need to make payment to the preference shareholders up to the period in which the company is having sufficient profits to make repayment. Am I right? But during the process of internal reconstruction, actually such arrears of preference dividend is not a liability, guys. Is not a liability. Because, sir, if the company is not at any profits, then no need to pay. Then how you can call it as liability? In general, that is not a liability. But during the process of internal reconstruction, the preference shareholders demanded to make such payment. Then only they are agree for the terms and conditions. Then at that point of time, company treat it as an unrecorded liability. Now company treat it as a liability, but till now we are not recorded. So that's why we can treat it as an unrecorded liability. Now, if the preference shareholders is ready to forego entire cumulative preference dividend, then what is the adjustment need to be passed during the process of internal reconstruction, sir? No entry. Just now we seen if for an unrecorded liability, the amount is foregone, no entry. For example, 4 years arrears of preference dividend is there. Out of 4 years, 3 years preference dividend they're ready to foregone. They're expecting 1 year preference dividend in the form of cash. What is the journal entry? Reconstruction account data to bank only for the 1 year. For the remaining 3 years, there is no entry. So such points you need to remember, guys. That concept is applicable in case of unrecorded liability. Now coming to the concept of unrecorded asset. Next, the issue is unrecorded asset. So just in case of unrecorded asset, it is only possible if it is realized in the outside market. If it is realized in outside market, then what is the general entry, sir? Bank account data to realization. Direct entry I am passing. If you want, first I will record in the same way. Let us assume the book value of the asset is 10 lakhs. You are realizing at the rate of 12 lakhs. You are realizing at the rate of 12 lakhs. Now, what is the journal entry, sir? First, you can record such asset into your books of accounts by passing the entry asset account data to reconstruction account, which is 10 lakhs book value, right? Now you are selling such specific asset at the rate of 12 lakhs, which is bank account data 12 lakhs to asset account 10 lakhs, which is profit. Such profit you can transfer to reconstruction account, which is 2 lakhs. Now, if you observe here, asset credit 10 lakhs, asset debit 10 lakhs, gone. Now the remaining net entry is, bank account data 12 lakhs to reconstruction account 12 lakhs. So now the conclusion what I am making here also, irrespective of the book value, at which value you are going to realize such asset is the prima facie. So at that price, you need to pass an entry bank account data to realization. Earlier realization to bank, but right now bank to realization. For example, the same asset is realized at less than book value. For example, you are getting 6 lakhs only. Then the entry is same bank account data to realization at the rate of 6 lakhs. So the ultimate conclusion, if unrecorded liability foregone, no entry. Unrecorded liability at the time of discharging, at which price you are discharging, you need to pass an entry reconstruction to cash. If an unrecorded asset is realized, at which price you are going to realize, bank account data to reconstruction. Am I right, guys? All of you with me? Let me check in the query box. Yes, sir. Absolutely fine. Okay. Sir, if you observe here, except surrender of shares, we completed all the theory issues related to internal reconstruction procedure, guys. Do you agree? So except surrender of shares, we completed all the issues. But surrender of shares, I don't want to deal at this stage. We will discuss it later. Except surrender of shares, remaining theory issues are completed. Now, till not at over, guys, my discussion, please all of you concentrate. Sir, after completion of the procedure, what I should need to do? Once the accounting treatment is over, then what I should need to do? I should need to check first. I should need to check balance in internal reconstruction. Balance in reconstruction account or balance in reconstruction account or capital reduction account. First, I need to check how much balance is there. Now, such balance should be need to apply. Such balance should be need to apply to cancel profit and loss account debit balance. Whether they mention it in the problem or not, that is not relevant for us. The main agenda or the main objective of conducting internal reconstruction procedure itself is to cancel or to nullify the profit and loss account debit balance with the balance of the reconstruction account. Now, all of you please concentrate. Here, at the time of nullifying, let us assume the balance in reconstruction. The balance in reconstruction is 15 lakhs. And the profit and loss account debit balance is, let us assume, 10 lakhs. Now still there is a balance in reconstruction after making nullifying. I mean to say reconstruction account debtor, you are using entire 15 lakhs you are debited to nullify the profit and loss account. In generally P&L having debit balance, now at the time of nullifying which is crediting. Now still there is a balance of 5 lakhs in the reconstruction account. That balance of 5 lakhs you need to transfer to capital reserve account. You know why? Sir, the profit is not a revenue profit which is not utilized for distribution of dividend. That profit is arised during the process of internal reconstruction. That's why which you can treat it as a capital profit and transfer to the capital reserve account. That is okay, sir, fine. For example, the scene is reverse. I mean to say balance in reconstruction account is 10 lakhs only, but the P&L account debit balance is there for 15 lakhs. Then what can I do, sir? Then first, to that extent of the reconstruction account balance, you can nullify first. To that extent of the reconstruction balance, you can nullify 10 lakhs. But how much profit and loss account debit balance is there? Which is 15 lakhs, right? The remaining balance you can nullify with other reserves, if at all exist. Other reserves. Sir, if the other reserves are not exist, what can I do, sir? To the extent of 10 lakhs only, I can nullify. So still profit and loss account debit balance is there in my balance sheet for 5 lakhs. I did my best efforts, but still balance is there. What can I do? So if at all reserves are there, I can use the reserves to set off the P&L account debit balance. But still, if it is there, we can't do anything. Still, we are making continue the profit and loss account debit balance, because reconstruction account balance is not sufficient to cancel the profit and loss account debit balance. Next, this is at the end of reconstruction, right? Apart from this, all of you concentrate. In case of intangible assets, it is specifically given that the existing intangible assets are unrepresented. If it is specifically given, those are unrepresented, then such intangible assets also nullify with a reconstruction account. When, if it is specified clearly in the problem, it is specified. Sir, if it is not specified, then no need to cancel the balances and intangible assets, because at that point of time you can thought that, sir, intangible assets are still performing well. If such assets having the outside realizable value, such assets having good realizable value in the outside market, so we can presume like that. So, but if it is specifically given that such intangible assets are unrepresented, then you can simply make it a cancel with the reconstruction account by passing the entry reconstruction account debtor to intangible asset account. But when, if it is clearly specified, then only we can do such things. Okay. Next, after completion of entire internal reconstruction procedure, you need to prepare balance sheet. At the time of preparation of balance sheet, you should add the word and reduced if court orders. Am I right? That point also you should need to remember. One more last thing, guys. At the time of preparation of balance sheet, guys, you should need to take care. So you should acting little bit wise. Why I'm telling this point? Each and every issue is changed in case of balance sheet components. Maybe share capital. Sir, is it decrease occurred? Is it increase occurred? Is it reduction occurred? You need to check by comparing each and every journal entry. Reserves. Sir, maybe reserves is impacted, or maybe finally any balance in reconstruction account is there. Can I transfer to capital reserves? Such all things you need to think. Coming to assets and liabilities, how much amount is foregone by each and every liability holder? Or is there any revaluation of assets is going to occur? How much cash balance is there after completion of internal reconstruction? Such all issues you need to think at the time of drafting the balance sheet. Anyway, so such things we are going to see through different problems, such things automatically habituated. So with this, I can tell major theory portion of internal reconstruction is completed, guys. Now let me go back to my text. Just I will confirm the things. I don't want to read each and every line here. Just I will confirm. Please all of you concentrate here. Now just I'm opening my text. Then in today's class, we are going to do certain problems as well. Internal reconstruction process, It is a process by which affairs of the company are reorganized by revaluation of assets as reassessment of liabilities. Yes, both are happen. We already discussed during the process of internal reconstruction, the same thing are occur. Revaluation of assets and reassessment of liabilities. And by writing off losses already suffered, by reducing the paid up value of the shares, yes, reduction of capital is also possible. The objective of reconstruction is usually to reorganize the capital or to compound with creditors. Yes, we are making compounding or negotiations with various creditors as well. Such as all activities are form part of internal reconstruction. Methods of internal reconstruction: alteration of share capital, variation of shareholders' right, reduction of share capital, compromise or arrangement, surrender of shares. In case of alteration of share capital, that is section 61. In case of variation of shareholders' right, section 48. In case of reduction of share capital, section 61 we've seen. In case of alteration, subdivision and consolidation is going to occur, and conversion of shares into the stock or vice versa occur. Am I right? So alteration of share capital discussed in section 61. The following type of alteration can be done under section 61. Increase of authorized capital. Actually, I was not discussed. In case of increase of authorized share capital, we are not passing any journal entry. Just in the balance sheet, we are increasing. Am I right? Consolidation and subdivision of the shares. We already seen through my OneNote. Conversion of all or any of the shares into stock or vice versa. So such all things in generally going to occur in case of alteration of share capital. This is not that much of material. So just I'm confirming the things. Now coming here, variation of shareholders' rights, section 48. Maybe the variation is related to provides when a company has issued different classes of shares with different rights or privileges attached to such shares. Example, rights as to dividend voting rights. If any variation is there with respect to dividend or voting right, we can call it as variation of shareholders' rights. So certain examples given. So cumulative preference shares, old cumulative preference shares are converted into the new percentage of cumulative preference shares. I mean to say, maybe 10% cumulative preference shares are going to convert into 6% cumulative preference shares. Then old percentage of cumulative preference shares need to be debited, new cumulative percentage need to be created. Maybe cumulative preference shares are converting into the non-cumulative preference shares. These are the journal entries. Next, coming here, reduction of share capital. Section 66 of the Companies Act 2013 lays down the procedure. So we already discussed it through a diagrammatic representation. The entire reduction of share capital, we discussed it through diagrammatic representation. There is extinguishment of unpaid capital. I mean, conversion of partly paid up into fully paid up equity shares by extinguishment of unpaid capital, by payment of part of the paid up capital, as well as sacrifice made by the shareholders, both reduction in paid up value, but there is no reduction in face value in one case, reduction in paid up value and reduction in face value in another case. All are same, guys. You can observe here, example number A, what happened? The company is having 10 rupees face value, which is paid up, partly paid up 7.5. They are cancelling the remaining 2.5 rupees per share. The entry share capital account that are 7.5 rupees face value to share capital account that are new 7.5 rupees face value as well as paid up value. I already passed the journal entries, no need to confirm. So paying of the paid up share capital, which is in excess of the requirements, we already seen. Next, cancelling any paid up share capital which is lost or is unrepresented by available assets. Reduction in paid up value only. Reduction in paid up value only, but there is no reduction in face value. No reduction in face value. That is the first case, share capital to capital reduction. If you check share capital to reconstruction account or capital reduction account, the same way we passed. Reduction in both face value and paid up value, then you need to decrease the face value as well. Okay, we've seen this one as well. Now coming to compromise or arrangement, a scheme of compromise or arrangement is an agreement between the company and its members or and outside liabilities. It is an agreement when the company faces financial problems. Such an arrangement, therefore, also involves sacrifice by the shareholders or the creditors or the debenture holders, but by all of them, which is related to the sacrifice agreement. The agreement is related to sacrifice. So surrender of shares, we will see at later point of time. Now all of you, let us come to the important points. Under the above mentioned methods, the alteration of share capital and the varying of the shareholders' rights do not involve the capital reduction account or reconstruction account. Yes, sir, in case of alteration of share capital, in case of variation in shareholders' rights, there is no sacrifice made by the shareholders. Am I right or wrong, guys? Maybe sacrifice is there with respect to of the dividend in case of variation in shareholders, right? The sacrifice is going to occur in future, but not right now. Is it currently any sacrifice occurred? Currently, there is no sacrifice. That's why in these two schemes of internal reconstruction, as per section 61 and section 48, there is no capital reduction account or reconstruction account is going to occur. It is only under the reduction of share capital, unrepresented reserves, or the compromise or arrangements with the outside liabilities and surrender of shares, there shall be a capital reduction or reconstruction account we are using. We already seen in case of compromise or arrangement, we use the reconstruction account. In case of reduction of share capital, also we use the reconstruction account. Next, an appreciation in the value of assets or reduction in the amount of liability should be debited to the account and concerned credit to give the capital reduction account. We already drafted a diagrammatic representation in case of revaluation of assets and liabilities. Am I right? Upward revaluation of asset, downward revaluation of asset, upward revaluation of liability, downward revaluation of liability. Such all things we discussed, right? Okay. Where it is? Here it is there. Okay. So for such point, he is discussing point number 3. Now coming to point number 4. Eliminate debit balance of profit and loss account and all overvaluation of assets by crediting the accounts concerned and debiting the capital reduction account or the reconstruction account. To eliminate the profit and loss account, the journal entry is reconstruction account at R2, profit and loss account. For this purpose, any reserve appearing in the books of the company may be used. For example, if the balance in reconstruction account is not enough to sufficient, if not enough to cancel the profit and loss account, then at that point of time, we may use other reserves. If you see in the second case, profit and loss account debit balance is 15 lakhs and the balance in reconstruction account is 10 lakhs, which is not sufficient. At that point of time, we use other reserves. The same thing he is mentioned. Okay. If at all any balance is left in the capital reduction or reconstruction account, it should be transferred to capital reserve account. In the first case, if you check excess balance is there in the reconstruction account, the excess balance you can make it transfer to capital reserve. Okay. Sir, if there is any balance in reconstruction account, it is finally transferred to the capital reserve under reserves and surplus. But if the amount for writing of the assets and accumulated losses is more than the reconstruction account, then reserves will be adjusted against the same. The same point he is repeating in point number 5. Now coming to point number 6. Sir, while preparing the balance sheet of a reconstructed company, the following points are to be kept in mind. After the name of the company, the words "and reduced" should be added only if the court so orders. In case of fixed assets, the amount written off under the scheme of reconstruction must be shown for minimum 5 years. So just 2 disclosures he is given. We already done point number A. At the time of preparation of balance sheet, we are using the word "and reduced." And one more important point he is telling, if there is a reduction in the fixed assets related to PPE or intangible asset during the process of internal reconstruction, you should clearly provide a disclosure while preparing the balance sheet, guys. This is the end of theory. Okay. So probably the internal reconstruction chapter is very small while compared with the amalgamation chapter. But problems wise, we will discuss a lot. We will spare much time on the problems. My objective is I want to spare much more time on the problems for internal reconstruction. Now, let us come to problems, guys. First, I don't want to take problem number 1 and 2, which are related to alteration of share capital. Very easy problems. We will do such problems. We will see such problems at later. The real internal reconstruction problem, we can see through problem number 3. Is it all of you ready, guys? Can I start problem number 3? Are you with me, all of you? Okay, first let me clarify some doubts. Okay, our students are sending queries like anything. First, let me check some doubts here. Sir, explain the entry of conversion of shares into stock and vice versa. Nothing is there, ma. For example, if the shares are converted into stock, then shares should be debited, stock should be created. That's it. Share capital account at R2, stock account. Share capital, you need to give debit. Stock account, you need to give credit. For example, the stock is again converted into shares. Then stock, you need to debit. Share capital, you need to give it credit. What is the difference between shares and stock? Why in general in the process of internal reconstruction, people are go for the stock? Sir, stock, any denomination is possible. For example, certain amount, if you can make it payment to the creditors in odd denomination, then you can easily make it payment in the form of stock. But we cannot issue the odd denomination in the form of shares, right? Why? Because fraction of the shares is not valid in the outside market. Okay. Next, one more doubt. Sir, what is the meaning of unrepresented assets? Sir, unrepresented assets means those are namesake we are having in the books. Let me take one example. We took patent on a formula. We took a patent on the formula. But right now our company is a loss-making company. That formula is not working, which is outdated. Right now, is it any value had for that formula in the outside market? No, which is an unrepresented asset. Maybe I can take another example. Sir, in my books of accounts, one building is there or one plant and machinery is there. The plant and machinery worth is 1 lakh rupee. But if I sell it in the outside market, I will not fetch more than 5,000 rupees as a scrap. Due to technical obsolescence, there is no value for the plant and machinery. Then which I can tell it as a unrepresented asset to the extent of 95,000. Okay. Next. One second. Oh, one more doubt he asked. What is that? Sir, if the balance under reconstruction account is not sufficient to set off with P&L account, you told that we can use other reserves, right? Sir, here other reserves means free reserves or all the reserves can we set off, sir? Only is it free reserves or can we set off other reserves as well? Sir, except statutory reserves. You can use any reserve because statutory reserve need to be maintained as per the statute. That's why we cannot utilize the statutory reserve, right? Except the statutory reserve, you can utilize any type of reserves. Okay. Next doubt. Okay. Hope cleared. Yes, guys. Right. So let us start with problem number 3, guys. All of you directly. So please give your focus on your screen related to problem number 3. Can I read? Right. The balance sheet of A & Company Limited as on 31st December 2011 is as follows. Which is the balance sheet as on 31st December 2011. First, I will go to the end. Just a second. Then I'll read the remaining content later. You are requested to show the journal entries reflecting the above transactions, including the cash transactions, and prepare the balance sheet of the company after completion of the scheme. So first, if you want to adopt the internal reconstruction procedure, you need to frame a scheme. Such a scheme should be ultimately submitted to the NCLT. If NCLT will give approval, then only you can start doing the things related to internal reconstruction. So that's why he's telling that you need to pass the journal entries for such internal reconstruction procedure as well as balance sheet after completion of internal reconstruction scheme. At the time of preparation of such balance sheet, you should need to add the word unreduced under brackets. Okay, now let me read the point by point. So first let us see the balance sheet, then we will read the additional information. Fixed assets, freehold property is there. Now I don't call it as fixed assets, I'll call it as PPE. That's the better thing. Okay. Next, this is actually old problem, that's why they mention it as a fixed asset. Next, plant is there, patent is given, goodwill is there, which is the total of the fixed assets given. Okay, trade investment at cost is there. Under current assets, trade receivables is there. Inventory is given. Profit and loss account is given. If you observe, I'm dealing with assets, but under assets, profit and loss account is there means, which is a profit and loss account? Debit balance. But right now, as per schedule 3, you should not show under asset side. You should be shown under negative figure under reserves and surplus. Next, coming to liabilities, cumulative preference shares is given. Equity share capital is given. 6% debentures is given. And accrued interest on debentures is also there. Next, coming to current liabilities, guys, bank OD, trade payable, director's loan. Those are the total assets as well as liabilities. Now, the court approved a scheme of reorganization to take effect on 1/1/2012. Is it court approval should be necessary for internal reconstruction process? Yes, absolutely. We should take approval from whom? Court means NCLT. So court approved the scheme of reorganization to take effect on 1/1/2012, whereby the preference shares to be written down to rupees 75 each, and equity shares are written down to rupees 2 rupees each. What is the meaning of written down, sir? Written down means reduction. Written down means reduction. The reduction in paid up value due to sacrifice made by such shareholders. Even though they are not giving specifically, we can simply understand that out of the 100 rupees face value of the preference share, each and every preference shareholder is ready to sacrifice to the extent of 25 rupees each. And out of the 10 rupees of the equity share, each and every equity shareholder is ready to sacrifice to the extent of 8 rupees per share. That is the essence of point number 1. Of the preference share dividends, which are in arrears for 4 years. So arrears for 4 years means, if you observe here, preference shares are cumulative preference shares. The amount of the paid up capital is 4 lakhs. 4 lakhs into 6% means 24,000 per annum. For 4 years means 24,000 into 4 years. This is the amount of preference dividend and cumulative preference shares. Now what he is talking, of the preference shares dividends which are in arrears for 4 years, 3/4 to be waived, 3/4 to be foregone, and equity shares of rupees 2 each to be allotted for the remaining quarter. Sir, if you really remember the concept of unrecorded liability, if unrecorded liability is foregone by the other party, then for waiving, no entry. Then for waive off, no entry. But for the remaining, sir, out of the 4 years, remaining 1/4 means, so 3/4 is waived off now. For the remaining 1/4 means, which is 24,000. For such 24,000, they are going to issue equity shares. What is the journal entry? Reconstruction account data to equity share capital account 24,000. Tell me guys, here we passed the entry reconstruction account data to cash account, right? Where it is? Here. Sir, if the foregone, then there is no entry. If it is discharging, the entry is reconstruction account data to bank account. If you paid cash, then to bank. If you issued equity shares, reconstruction account data to equity share capital account to the extent of 24,000. Okay. Sir, here what is the journal entries for preference shares and equity shares? Cumulative preference share capital account data. Total face value and paid up value you need to cancel. To cumulative preference share capital, now face value 75 rupees. The remaining difference you can make it transfer to capital reduction account or reconstruction account. Sir, why sir you are reducing both in paid up value as well as face value? I already told you in theory, if nothing is mentioned, if at all there is any sacrifice made by the shareholders, we can presume that there is a reduction in paid up value as well as reduction in face value also. If it is specifically given, sir, there is only reduction in paid up value only, there is no reduction in face value, then only you can apply. Otherwise, you can simply presume that there is reduction in face value as well as paid up value. That point also bear in your mind, guys. Okay. Just give me 2 seconds time. So, due to continuous flow, my throat is drying like anything. Okay. Right. Let me continue, guys. Accrued interest on debentures to be paid in cash. Accrued interest on debentures to be paid in cash means, sir, if you observe here, accrued interest is there for 22,500. Just you are making payment to the accrued interest. What is the journal entry at the time of making payment to accrued interest? Accrued interest account data to bank account. That's it, which is normal entry. Next, coming here to point number 4, guys. Debenture holders agreed to take over freehold property. Book value is 1 lakh at a valuation of rupees 1,20,000 in part repayment of their holdings. So this is one sentence. First, let me complete this. Part. Now, debenture holders. How much debenture holders are there? 3,75,000. In bracket, it is clearly given secured on the freehold property. Now, at the time of making repayment to 6% debenture holders, we can utilize freehold property. Now, Out of the debenture holders, 3,75,000 exist. So that is one thing. Please put it under aside, which is 3,75,000, which is debentures. Now, the existing freehold property book value is there at 1 lakh. Now, such 1 lakh is considered at the rate of 1,20,000 by the debenture holders. That means first what happens are upward revaluation of freehold property is occurred. From 1 lakh to 1,20,000 means 20,000 upward revaluation is going to occur. You know, at the time of upward revaluation, what is the entry you should need to pass? Freehold property account to reconstruction account, 20,000 first you should need to pass. Then in your books of accounts, freehold property is showing at 1,20,000. Now such 1,20,000 you can make repayment to debenture holders. Now what is the journal entry at the time of making payment to debenture holders? How much percentage debenture holders? These are 6% debentures. That is 6% debentures account that are only to the extent of 1,20,000 only you should need to cancel. To debenture holders account. Then debenture holders account that are to freehold property account. You can pass a direct entry as well. 6% debentures to freehold property, but these are persons, right? So that's first we transfer the liability to the actual person, 6% debentures to debenture holders, the debenture holders to freehold property account, 1,20,000. So after passing this entry, still how much balance is there under debentures, you know? 3,75,000 minus 1,20,000. Still how much balance is there under debenture holders? That is debentures minus 1,20,000. Still I have 2,55,000 balance under debentures account. I will explain each and everything again in my OneNote, but no worries. For the time being, just I am reading the problem. I'm explaining the content. So the balance in debentures account is 2,55,000. Sir, how much balance is there under freehold property? You know, originally in freehold property, if you check where it is there, freehold property, 4,25,000 is the book value. So the original book value of the freehold property is 4,25,000. But out of such 4,25,000, you already discussed about 1 lakh, right? Now still how much balance is there in the freehold property, sir? Which is 3,25,000. What about such freehold property? Nothing is given till now. So just we will see at the appropriate time, if at all anything is given about the remaining freehold property. Okay. Now this sentence is over. And to provide additional cash of rupees 1,30,000 to whom? Company. To provide additional cash of rupees 1,30,000 to the company, secured by floating charge on company's assets at an interest rate of 8% per annum. Sir, you need to understand the story written by the poet here. I mean, what his intention is to provide additional cash means to whom, sir? To whom the debenture holders can want to provide additional cash? To the company. So just it is clearly given that debenture holders is subscribing the additional debentures to provide certain cash to the company. Now the new debentures are 8% debentures, which is simply issue of debentures entry. What is the journal entry at the time of issue of debentures? Bank account that are 1,30,000 to 8% debentures account 1,30,000. Now, right now they are having floating charge on all the assets. Earlier they have a fixed charge on the freehold property, but right now they are having a floating charge on all the assets. Simply the additional entries for the purpose of issue of debentures. Bank account that are to 8% debentures account. Hope you understand point number 4. I'll explain once again to OneNote. Don't worry. Patents and goodwill written off. It is clearly given that in balance sheet, patents and goodwill are written off. Both you should need to make it transfer to reconstruction account. That is reconstruction account that are to patent account to goodwill account. Okay. Next, inventory to be written off by 65,000. Reconstruction account that are to inventory account 65,000. Sir, if at all there is a downward revaluation of the asset, the downward revaluation profit or loss, you should need to make it transfer to reconstruction account. Amount of rupees 68,500 to be provided for bad debts. Sir, due to provision of bad debts, the existing debtors balance is decreased. That means indirectly he is telling that there is a decrease in the revaluation of an asset. The entry is reconstruction account that are to trade receivables account. If you observe here, trade receivables is there, right? There is a decrease in such value. Then reconstruction account that are to trade receivables account. Next, Remaining freehold property. Where is the remaining freehold property? Here it is there, 3,25,000 to be revalued at 3,87,500. So 3,25,000 is revalued at 3,87,500 means still you are getting profit. How much? 3,87,500 minus 3,25,000. Now you are getting a profit of 62,500. Now, at the time of upward revaluation of the remaining freehold property, the entry is freehold property account to reconstruction account, 62,000. Do you know what is the total profit you are getting due to revaluation of the entire freehold property? Earlier, you are getting 20,000 from 1 lakh to 1,20,000. Earlier, you are getting 20,000 profit. Right now, you are getting 62,000 profit. So total, you are getting 82,000 profit due to upward revaluation of the entire freehold property. Okay. Trade investment be sold for 1,40,000. Book value, how much trade investments? Which is at 55,000. Right now, you are selling such 55,000 worth of assets at 1,40,000. Almost how much profit, guys? 1,40,000 minus 55,000 equal to 85,000 is the profit to me. Then what is the journal entry I need to pass here? Bank account that are 1,40,000, to investment account 55,000, to reconstruction account 85,000. Profit or loss at the time of sale of investment or during the process of internal reconstruction, any profit or loss you derived, you can make it simply transfer to reconstruction account. Directors to accept settlement of their loans. So directors loans is there. If you observe, director loan is there for 1 lakh. He is discussing about this 1 lakh. 1 lakh as to 90% thereof allotment of equity shares of 2 rupees each, and 5% is in cash, and the balance of 5% being waived off. The entry is director's loan account that are total 1 lakh. Out of such 1 lakh, allotment of equity shares happened at 2 rupees each for 90%. 1 lakh into 90% is 90,000. To equity share capital 90,000. 5% in cash means to cash for 5,000. To cash for 5,000. The remaining is waived off means you can make it transfer to reconstruction account, which is profit. The entry is director's loan account to equity share capital to cash to reconstruction account. Next, coming to the point number 9, there were capital commitments totaling 2,50,000. These contracts are to be cancelled on payment of 5% of contract price as penalty. Sir, what is related to this? You know the concept of onerous contract? Maybe you learned such concept in Contract Act. Onerous contracts. What is the meaning of onerous contract? You know, onerous contract means if we continue the contract in future, we may derive the loss. Rather than continuing such contract, it is better to close such contract. We are not getting any profits from such contract in future. So rather than continuing such contracts for the future, it is better to close such contract. So like that, our company is having capital commitments totaling 2,50,000. Maybe our company entered to construct a PPE. Maybe our entity is entered to sell a PPE. Maybe anything which is related to a capital commitment. Right now, I want to cancel such capital commitment because if I will honor such capital commitment, I will incur much more loss. But in such capital commitment, one of the provision is if the party want to cancel such agreement, then the party should need to pay certain amount as penalty. Now we are cancelling such capital commitment by paying such penalty. That is 2,50,000 into 5% is the penalty. The penalty amount is 12,500. Now at the time of making payment of penalty, what is the journal entry actually? Penalty accounted to cash or bank. So penalty in generally make it transfer to profit and loss account. But during the process of internal reconstruction, any expenditure you should need to make it set off with reconstruction account only. Now the penalty will goes to the reconstruction means reconstruction account data to cash account, which is the entry for 12,500. Reconstruction account data to cash account is the entry for 12,500. Ignore taxation and cost of the scheme. You are requested to show the journal entries reflecting the above transactions, and after that you should need to prepare balance sheet. Let us start, all of you. So hope I completed all the points and you understand. The problem is very easy. So after resolving the problem in OneNote, your confidence level is enhancing like anything. Okay. Now let me open. So problem is problem number 1. Sorry, problem number 3, not 1. Problem number 3. Sir, some of the student actually, I raised a question in the earlier classes. Okay, I am not having a time to resolve that. That is not related to concept, guys. That is related to material. Sir, is it your material contains the study material problems? Guys, if you observe, all the problems what I discussed are purely related to the study material problems, but which I converted as my own material. That's it. And one more advantage I will tell you, apart from the study material problem, which also contains previous examination problems. You already seen in case of amalgamation, I almost did 3 to 4 problems related to previous examination. I also covered revision test paper problems as well. That's why no need, without having any second thought, you can simply proceed with my material. The questions are arranged in such a way that will covers all type of examinations, MTPs, RTPs, study material, and the practice problems. Okay. Right. Can I proceed with problem number 3, guys? Can I proceed? No one is giving air. Nobody is giving a reply. If you tell, then I will proceed. Are you with me? Can we start doing things related to journal entries? All of you? Okay. Yes, sir. Yes, sir. Right. Now let us start journal entries. Journal entries in the books of whose books those are? Whose books, guys? Company name. A and Company Limited. A and Company Limited. So I don't want to put in the format, but in the examination, you need to proceed with the format, guys. You know the general format, right? I'll directly pass the journal entries without putting any format. So now the first and foremost entry, reduction of the paid up capital. Preference shares to be written down to 75 rupees, right? Now 6% cumulative preference shares, 6% cumulative preference share capital account data. Sir, entire face value you need to cancel first. How much amount? Face value 100 rupees. What is the total amount of 6% cumulative preference share capital? 4 lakhs. Which is reduced to 75 rupees. To 6% cumulative preference share capital. Now the face value is 75 rupees each, which is 3 lakhs, right? Tell me, guys. Preference shares to be written down to 75 rupees, not written down by, which is written down to. So now the remaining amount is profit. You can make it transfer to reconstruction account. So to reconstruction account, the difference is how much? Which is 1 lakh. You can give the narration in the examination, but I don't want to provide narration also. Being 6% cumulative preference shares are reduced to 75 rupees each, and we recognize the difference as profit under reconstruction. Okay. Next, coming to point number 2, guys. So, sorry, in point number 1 only, second entry. The equity shares are reduced to 2 rupees each. What is the existing equity share capital? 7,50,000. So, equity share capital account data. So, total face value is 10 rupees. Amount is 7,50,000. Face value how much? 10 rupees, right? To equity share capital account, in bracket 2 rupees. In bracket 2 rupees means 75,000 into 2 rupees, which is 1,50,000. To reconstruction account. Which is 6 lakhs, guys. That is the end of point number 1 actually. Coming to point number 2, preference dividend, guys. He is discussing things related to preference dividend, right? Concentrate. Arrears of preference dividend. So what happened? Just I'm explaining here. Then we can proceed with journal entry. In case of arrears of preference dividend, the total arrears of preference dividend is for 4 years. So the 4 years means, which is 4 into per annum 24,000. How we will get such 24,000 actually? So which is 4 lakhs. 4 lakhs into 6% is 24,000 per annum. Now out of this, 3/4 waived off. So 3/4 is waive off means no entry. Am I right? Remaining 1/4. What we are issuing for the remaining 1/4? We are going to issue equity shares. For the remaining 1/4, we are issuing equity shares. Now, what is the journal entry if you issue equity shares? The entry is reconstruction account debtor to equity share capital account, which is 24,000. This is the impact. Next, come to the point number 3. Accrued interest to debentures to be paid in cash. How much is the accrued interest, guys? So accrued interest is 22,500. You can payment in the form of cash. Accrued interest 22,500 to cash account, which is 22,500. Okay, next, coming to point number 4, debenture holders and freehold property. First, he is discussing about debenture holders and freehold property. Please, all of you take the discussion first. Freehold property, guys. Freehold property. Now, can you please tell me what is the book value of such freehold property? 4,25,000. So the book value is 4,25,000. Now, out of this 4,25,000, first he discussed about 1 lakh worth of freehold property. Out of such 4,25,000, he is discussing about 1 lakh book value. So for the 1 lakh book value, first they are making revalued into 1,25,000. Upward revaluation. Now what about the remaining 4,25,000 minus 1 lakh means remaining is 3,25,000. For the remaining 3,25,000, in the other point he told, where in point number 8, remaining freehold property to be revalued at 3,87,500, which is revalued at 3,87,500, which is also upward revaluation. So what is the total revaluation profit here, which is 25,000? Here, which is how much? Here 62,500. So can you please make it total? What is the total of revaluation profit? Therefore, total revaluation profit 62,000 plus 25,000, which you get 87,500. Now, what is the journal entry, sir, for such upward revaluation of freehold property? Freehold property account debtor to reconstruction account. How much amount? 87,500. So these things you can put under working notes as well. Nobody will object you, but just for understanding purpose, I am putting such things under at the time of passing journal entries itself. Still not at over, guys. Now what you are doing, such freehold property of 1,25,000, of 1,20,000, 1,25,000, you are giving to whom? Debenture holders. So in your book, 6% debentures are there. For such 6% debentures, you are making payment of 1,25,000. So first 6% debentures account at R, which is 1,25,000. With that amount only, you should need to cancel to debenture holders account. Then you can give such freehold property to them. Debenture holders account at R2, freehold property account. This is the entry you need to pass. And one more thing, guys, debenture holders are also agreeing for subscription of additional debentures. You are issuing additional 8% debentures. Am I right? For the purpose of augmenting of the cash, that is 1,30,000. So at the time of issue of debentures, the general entry is bank account at R to 8% debentures account. Amount how much? 1,30,000. Okay, with this entire point number 4 is over, guys. Point number 5, patents and goodwill to be written off. We will consider at final. No worries, we will consider at final stage. Inventory to be written off. In a single entry, we will pass all these things. And amount of 68,500 to be provided for bad debts. Am I right? So for all these, decrease only. That means reconstruction loss only. Reconstruction loss only. Now how you can pass here? Reconstruction account at R. Single entry is enough. Reconstruction account at R2. Patents account, goodwill account. Sir, patents how much, friends? Patents book value 37,500, right? Patents is 37,500. Goodwill is how much, guys? 1,30,000. So first 2 assets you have written down. Next, the next point, inventory to be written off by 65,000. So you can add inventory as well to inventory account, which is 65,000. What is the other one? PBD to trade receivable account. In bracket, if you want, you can mention which is a provision for bad debts. How much, guys? 68,500. Now you can make it total here. 37,500 plus 1,30,000 plus 65,000 plus 68,500. I got the total 3,01,000, guys. Okay. Next, concentrate. We completed point number 8. Remaining freehold property to be revalued 3,87,500. Trade investment. Let us come to the trade investment which are sold for 1,40,000, right? All of you please come to point number 9. Bank account at R, we are selling at 1,40,000, but the book value to trade investments we seen earlier, which is 55,000. Profit you may transfer to reconstruction account. What is the difference? 1,40,000 minus 55,000. 85,000 you can make it transfer to the reconstruction account. Next, come to the next entry, guys, which is the director's loan, right? So director's loan total is 1 lakh. So director's loan total is 1 lakh, out of which 90% is you are issuing in the form of equity shares to equity share capital. So remaining 5% is you are paying through cash. This to bank account 5,000. Remaining waived off means which can be transferred to reconstruction account, which is 5,000. Next, guys, come to the 11th point. So which is on onerous contracts, we are paying the penalty. Reconstruction account at R2 cash account. Reconstruction account at R2 cash account. We already made the entry here. Okay. Reconstruction account at R2 cash account, which is 12,500. Sir, now entire journal entry is passed for reconstruction account. Am I right? Now all of you, please hold calculator with you guys. Please all of you hold calculator with you. Now we should calculate how much balance is appearing under the reconstruction account. In the journal entries, if the reconstruction is a credit aspect, you may add. In the journal entries, if reconstruction account is a debit aspect, you may reduce. Now let us start with first entry. Reconstruction account is a credit aspect, 1 lakh, which is profit plus. Second, reconstruction profit plus 6 lakhs. In the third entry, reconstruction loss minus 24,000. In the fourth entry, there is no impact. Coming to the fifth entry, reconstruction profit plus 87,500. The sixth entry, there is no impact. Seventh entry, there is no impact. Eighth entry, reconstruction, there is a debit loss minus 3,01,000. Coming to ninth entry, reconstruction credit plus 85,000 profit. 10th entry, reconstruction again profit plus 5,000. 11th entry, reconstruction loss minus 12,500. I got 5,40,000 guys. I got 5,40,000. So how much amount you received? Can you please tell me through chat box? All of you quickly. Sir, it is 1,20,000, not 1,25,000. Which one, yaar? Someone is talking. So someone is telling that, sir, it is 1,20,000, not 1,25,000. Which one? Please, can you put it in the chat box, ma? Which one it is you are talking? Six percentage debenture. Aha, this one. Aha, revaluation. Nah, sorry. At a valuation of 1,20,000. I understand your view. So this you are talking. So this is a clerical mistake. Only 20,000 profit. Okay. So now 20 plus 62, 82,500. Just a second. I'll changing this. 82,500. Okay. Now then 6 percentage debentures. 1,20,000. Here also 1,20,000. Debenture holders to freehold property is simply 1,20,000. Okay, am I right? So now I rectified, right? I rectified everything. You are right, ma? Tell me, guys. Okay. Now that means earlier 5,000 excess I consider. Now I can reduce the 5,000. Now I got 5,35,000 under the reconstruction account. Am I right? All of you, can you please participate? Now I am getting 5,35,000 under the reconstruction account. After rectifying the thing, earlier which was 1,25,000, that's for reconstruction I got 5,40,000, but right now I reduced 5,000. That's why the balance under reconstruction account is 5,35,000. Now all of you concentrate. The balance under reconstruction positive, which is a credit, I have 5,35,000. Now I need to nullify the balance under reconstruction account with the profit and loss account. So P&L account debit balance, how much you have? Exactly 5,35,000. Yeah. So P&L account balance is also having debit balance 5,35,000. For example, excess balance is there under reconstruction account, you would transfer to capital reserve. If less balance is there under reconstruction account, you may utilize the other reserves. But here exactly matched. That's why you can set off here. That is reconstruction account data. Reconstruction account data. The balance is 5,35,000 to profit and loss account, which is 5,35,000. That's it, guys. With this, there is no balance under reconstruction account. Sir, apart from passing journal entries, you asked to do one more thing, which is balance sheet. So in this session, we can't complete the balance sheet. So please, all of you revise the things before attending the next video lecture. This problem, I mean, still not yet over. The balance sheet I will discuss in the next lecture, guys. Until bye, have a nice day. Thank you, sir. Yeah, yes, sir. Concluded. I'm leaving.